Hi and welcome back to Cheeky Crypto. My name is Nick, and today, guys, we're going to be jumping down into the world of Bitcoin, taking a look at what's been going on with the most recent price action and what I think is likely to happen next. Now, as I get into today's video, if you do find it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe? You can always unsubscribe later. If you're watching this on X, then why not go ahead and make sure you're giving us a follow and a repost. Really do appreciate that. Helps spread the content out to more like-minded individuals. Okay, guys, let's waste no more time. Let's jump right down into it and take a look at what's going on here with BTC. So kicking things off with the 1 hour time frame, we have a Bitcoin paired up with USDT. We're on the Bitget spot exchange, and obviously this is the 1 hour time frame. Now, obviously we did start a short position, so I actually had a couple of these going. We had the idea of shorting the market just over here somewhere. But I didn't enter. We had a nice move up, so I decided I would enter into a short position, and it's been very profitable so far. We'll probably talk more about that later in the trade section of today's video. But at the moment, we can see here that we are looking still progressively to the downside. This, to me, looks like a leading diagonal for our wave 1 of wave 5. Okay, so if I zoom out just a fraction, you can see that we're looking for this wave 5 move down here. Okay, it's between 23,287 to 24,113. This wave 4, I think, is done here as it got rejected on our 200 EMA. Okay, so that or something else is occurring here, but I think for the most part we probably have a running flat correction into our 4. And then, of course, actually, we can't really have a running flat, to be fair. So maybe I'm not quite getting that positioning right. Anyway, here we're starting our move to the downside. We've either started up here, our diagonal is to this point. Doesn't really make sense. I mean, it could be just a big diagonal, which is why it's not making the most amount of sense. We could see, for example, a 3-wave correction here. We have a 3-wave correction here. It's probably about right, actually. Wave 1, wave 2, we're going into wave 3. And I think, yeah, it probably is going to have to be a big diagonal. And this here is actually a part of that move. So let's go back into this. So this particular move is not going to be a 5-wave structure. It will be a 3-wave structure, but it might contain a few 5-wave structures in itself. That sounds like a mouthful. I expect us to move up a little ways and then move on down. Okay, so we are looking for a big 3-wave pattern. It will come down quite deeply here. We should, in theory, break this low point over this side soon. At 24,635. So with things that are going on, we've got the Jerome Powell speech, I think at 15:05 UTC +1 today, and historically we've seen a Bitcoin get rejected here anyway from today. So I think, if you take a look at history and how the symposiums go, we usually see rejections. So expect downside today, but I think we're probably, before we have that move to the downside, we're probably going to grab or try to grab the liquidity from the higher in the price range, i.e. liquidate the people who are shorting the market before we move down. So I suspect we'll probably move up before we move down. So nonetheless, everything here is still on track. I do still see us moving down into our 5th wave target. The direction that we're going in, or the sizing of the moves that we're going in down here, it might lead us to truncate, but for now it still looks like it's very much on track for 23,287 to 24,113. This will be a wave 3, and essentially that will build us up into a bigger position on a larger time frame. And so ultimately, we are where we are with this one. It still looks like we've got plenty of progression to the downside to be had here. We're not yet done on our 1 hour time frame. So let's go ahead and take this up into the daily. This is where you can start to see, we have this big kind of idea of a 5-wave move. We're in the wave 5 of the wave 3, and we're probably in wave 3 of wave 5 of wave 3 if we really kind of nest it all together. And we'll look for a move upwards once we complete that move down. Once we complete wave 3, we will be looking for a significant bounce that bounce will basically get us back up into overbought territory on many of the timeframes. We'll then be looking for another fifth wave move to the downside, where we target out 22,659 to 23,426. Now, this is subject to change because this is just based on standard wave 4s. Okay, so if we just follow what typically would happen for a wave 4, then this is the target range, and we won't know how deep wave 5 is going to go until we complete wave 4. So it's just a bit of guesswork at this point in time based on current structures and estimates of where wave 4 and wave 5 should be based on that wave 3. Okay, so for the most part, everything on the daily chart is unfortunately in a bearish state of play. As I said many times before, we've got our 50 EMA currently above the 200 EMA, and the price action is below the 200 EMA. I suspect that the 50 EMA over the next week or so is going to cross down lower than the 200 EMA, and essentially this means short-term price action is lower than long-term price action, seen bearishly by many. So there's definitely a lot of fear starting to creep into the space out there, and actually that's an opportunity more so than anything else. We often say that you should buy the fear, and well, it's no exception. I expect that we're going to see a significant bounce once we actually complete this 5-wave structure, where we'll probably be revisiting the $29,000 area, and of course that's going to trap a lot of bulls out thinking, okay, we're done, it was just a fake out, and then we go back to the upside. Unfortunately, if we do complete a 5-wave structure like this, we have to go down in another 5-wave pattern, and $20,000 is my area of expectations here when it comes to BTC. There's a CME gap down there in the same way that there's a CME gap just a little bit higher in the price chart of where we are, or we currently left on this way down. So everything on the daily chart looks unfortunately like we're going to see some moves to the downside before we get any kind of good price appreciation back to the upside. Ultimately, I do expect us to kind of get some good trades opportunities on the back of this, so definitely watch out for those and all that kind of good stuff. Let's go ahead and take this up into the weekly. So the weekly time frame is actually finding good support on the 200 EMA at the moment, but is also getting rejected on the 50 EMA. We find ourselves sandwiched between the two, as you can kind of see right down here. With our candlestick, it's basically closing above at the moment, looking to close above the 200 EMA, but also getting rejected on the 50 EMA. Yeah, I suspect we are going to be challenging the lower side again. We'll probably lose this, and the question becomes the Sunday and the weekly close is whether or not that's going to end up in a stronger position or weaker position. Close below the 200 EMA, and I think we're going to see a negative reaction in the space. Close above, and the bulls have got it sorted for another week. Getting above the 50 EMA is really what the bulls are going to look for the weekly close, but we'll talk more about that over the weekend. Ultimately, for now, it's looking okay on the weekly time frame, but we should be cautious nonetheless. Okay, and again, weekly time frames take a very long time to play out. It's not something that you're going to see instantaneous results on, so just bear in mind we are talking months of work going into this particular chart here. Now, if I zoom out of this, you can see we had that resistance right up here at the 28,600 towards 32,289. This is the area where we were hoping to actually rally on through and go up towards 34, 37, but that hasn't happened. It's not to say that it can't, it's just that it's unlikely to do so right in here. They've also got a bit of a bearish setup right here. We have the higher highs right up here, and we've got the higher lows right in here. This is not a good sign. This is a bad sign, so I expect us to eventually break on down. Now, we can, of course, rally up to those higher ranges again. Don't have to break down right now, but we know what's going on those smaller time frames doesn't look overly great. A retest of our previous resistance and probably rejection, taking out that local low at some point. 20K is obviously the area of interest, not only as an area of consolidation previously, but it was that CME gap as well. There are some fair value gaps, of course, also notable down here in the price chart, a lot lower, more towards that $17,000. So again, we'll see how that one plays out over time. Let's go ahead and take this up into the world of data and news. So membership.𝗕𝗘𝗪𝗏.io is our membership website. We have many different perks for members. So why not go ahead and check it out? Linked in the description down below. We do a 7-day free trial for all the plans. And if you do not want to continue, then just make sure you go to your profile and you basically cancel it. If you do not cancel it from your profile area, you will be charged. But otherwise, it's a 7-day free trial. You can enjoy the benefits. And, I think you guys are going to like it so much that you will stick around and stay. But of course, if you don't, you can cancel it at any point. Now, in here, we are going to go take a look at the data zone, and we're going to find the Bitcoin on-chain data, which is this one here. Okay, so in here, we can see quite a few different overarching stats, right? The Bitcoin circulating supply at 19.4 million. We have the all-time high, the number of days since its all-time high. The percentage is down from its all-time high, all the way through to how many Bitcoin were mined in the last 24 hours. So good stats, nothing really noteworthy at this point in time though. So what we'll do is we'll move on over into the wallet data. Now the wallet data shows us with the amount of wallets or the count of wallets that have over a specific threshold of BTC. This allows us to see certain pockets of wealth and how they are reacting to price action, or whether they are creating price action, as the whales, for example, would be looking at it. So there are 10 different size wallets for Bitcoin. We have everything from 0.001 BTC per wallet all the way through to 1 million. Obviously, there are no wallets with 1 million BTC. 100,000, though, there are 4 wallets with 100,000 BTC or more. And again, a year ago, there were 5. Okay, so we know that actually it has dropped down a little bit. We actually peaked up here at 6 at one point in 2019, all the way down into the lows of 2020, where there was only 1 wallet with 100,000 Bitcoin. That has gone up since the 2021 highs and the bear market, but ultimately it hasn't been reacting overly well right now. Taking it to the 10,000 BTC or more, there's 108 wallets here. This is up 0.93% in the last 7 days, up 0.93% in the last 30 days. So basically not much change has happened in the last 30 days. In the last 3 months, it's actually down 5.26%. And in the last 180 days or 6 months, it is down 4.4%, right? So it's not been accumulating in 2023. However, in 2022, it was very much accumulating. It's actually up 11.34% during 2022. And this is because historically, these wallets, whether these are just cold storage for whales, I don't know, but essentially these guys accumulate during the bear market, and then they use that accumulated BTC, at least historically in 2018, they basically flooded the market with excess supply, bringing us down into the bear market low point. That's what this big drop here is. Now, there's many reasons for that. I speculate to say that all they wanted to do was bring in the lows so that they could shake out retail investors, because it did a very good job at doing that. Or it could be that, many other reasons as to why they needed to do these things. Nonetheless, we have a very similar setup, accumulating during the bear market in itself, and they started to turn down. So the question becomes, is this turn down since we were at a peak of... He says, if I can even get it on the nose, I'm not going to be able to. Let me zoom in. So we peaked out. We peaked out on 121 wallets. So the question becomes, is that the peak, and is this now the downturn where we're looking at moving down in these wallet counts, right? And so there's a few things to kind of consider here. Is that we might not see that sharp decline that we saw before from over here, for example. We might just see this kind of, more easing, liquidity grabbing kind of move. I don't know. But ultimately, it's an interesting take, because it's a very similar setup: accumulate in the bear market and then start selling as liquidity is there, or as you want to kind of bring the market down. It could be that essentially the market rallied up way too much, and this is is them trying to suppress the price, trying to keep the price down lower for longer. I don't know. But ultimately, it's an interesting one to keep an eye on. Now, when we take a look at the whales, which is 1,000 Bitcoin or more per wallet, there's 2,018 of these, and they're down pretty much across the board, right? So last 365 days, they're down at 6.31%. In the last 6 months, they're down 0.59. Last 3 months, down 0.84. flat in the last 30 days and flat in the last 7 days. So not a lot really going on in the last kind of month or so with these wallets, and not really a lot of purchasing activity has really been occurring at all in the last 365 days. Again, not really backing the moves of Bitcoin. This is an interesting one because they were selling all the way through November into towards March of 2023, and those were the local lows. I think we had the low count being 2007 wallets, right? That happened in March of 2023, which essentially means that even after the FTX saga, they were still selling into the moves to the upside until this point here, where basically they just go sideways. A few people buying, a few people are selling, and not much has happened. And that tells us that actually this move to the upside is not really being backed by large players. It's not really being backed by 10,000 BTC wallets. It's not being backed by 1,000 BTC wallets. Is it being backed by 100 BTC wallets? No, because they're flat across the board as well. This is a trading opportunity, and they're continuing to come out and sell into their positions. They are not they're not backing the moves either. So who is backing, right? You can't just have all this Bitcoin being sold. Someone's got to be buying it. And well, fortunately, that's your retail investors. Your retail investors are the ones that have been basically buying up all that additional Bitcoin that's entering into the ecosystem. And so the kind of question here is a simple one. Who do you think's on the right side of the trade? You've got large money or institutional money, smart money, versus retail money, or what is commonly known as dumb money. And so which one is on the right side of this one? I mean, I can speculate. I don't have answers to this. It's for you guys to kind of ask yourself the question, think, okay, do we think the smart money, the big funds, the institutional funds are making a mistake? Or do we think that retail investors, small money, is making a mistake? Let me know what your thoughts are in the comments below. Taking this out towards the news articles and things like that, anything noteworthy? Well, Bitcoin options data points to an interesting outcome after this week's 1.9 billion expiry. So this is an interesting thing. So basically, the upcoming $1.9 billion Bitcoin monthly options expire on the 25th, that being today, is key for defining whether the $26,000 support level will hold. One could pin the recent cryptocurrency market sell-off on the United States Securities Exchange Commission, delaying its decision on spot Bitcoin ETFs. But there's also macroeconomic perspectives, which we've been talking about quite a bit. Ultimately, it'll be interesting to kind of see what happens here to prevent a potential loss of $380 million due to the monthly Bitcoin options expiry. Bitcoin bulls must ensure Bitcoin's price trades above $27,000. Do we think that Bitcoin's going to rally up to $27,000 today? Let me know. I'm not so confident on that one, but I do expect an attempt on it nonetheless. So yeah, there's a lot of things to kind of think about here, but ultimately, I don't think it's going to be a positive outcome. Now, when we kind of come back in and take a look at the exchanges, we can see $16.1 million of liquidations on Bitcoin. OKX is the exchange with the most amount of liquidations at 4.81 million. 86.92% of the positions are long positions that were liquidated, and 13.08% were short positions. OKX is 29.87%. 𝗕𝗘𝗪 is strangely high at 28.86%. Binance at 25.83%. Bybit at 7.1%. And so the unusual activity here is that how 𝗕𝗪𝗪 is unusually high for its liquidations today. This is unusual activity, and so therefore we want to be very, very cautious. We obviously had lots of rumors around 𝗕𝗪𝗪's insolvency, and this could still be an ongoing issue. With this amount of liquidations, it could be basically ways for them to kind of become solvent again. We saw very similar things with FTX and a few other exchanges over the years, and so we need to be very, very cautious. I probably would not be holding my funds on 𝗕𝗪𝗪 here, and probably wouldn't be using them to trade either. To me, this seems incredibly high risk and not really necessarily something that would be worth the risk. Now, when it comes to exchanges, and I say this pretty much every day, it's important that we spread our risk. We don't just have, one exchange that becomes our go-to. Instead, we want to make sure that we actually are registered and are using as many of these exchanges as we possibly can. Now, at the moment, Bitget is my go-to platform. I use Bitget for 100% of my leverage positions and 90 to 95% of my spot positions. Now, there is an affiliate link in the description down below for Bitget, and if you do use that link, you are eligible for up to $8,000 of rewards depending on how much you deposit and trade on the platform. Now, Bitget I find a very easy and intuitive platform. It quickly became my go-to, and it wasn't ever actually intended to be my go-to platform, but I enjoy using it that much that it simply is just a pleasure to use. Now, there are many different exchanges out there. I am registered on Binance, Coinbase, KuCoin, Gate.io, Bybit, Crypto.com, and so many others. And it's for good reason. This way, I can spread my risk. I don't have to be centralized on one exchange. I can actually be operating and trading on many. For example, I don't tend to do spot buys through limited orders. If I were to do limited order spot buys, I wouldn't be doing that on just one exchange. I would have that spread across as many as possible, so that I didn't have too much of my stable coins on one particular exchange. Spread the risk, do the risk management. How much of your stablecoin portfolio are you willing to lose should something happen to your exchange, right? Is 5-10% too much, and so forth, right? So having good risk management when it comes to exchanges is very, very critical, specifically if they are not solvent. You don't want to lose access to your cryptocurrencies. So as I said, Bitget became my go-to very, very quickly, but we do not store cryptocurrencies on the exchange. We withdraw them. The only exceptions to this is leverage trading, where we have to keep a certain amount of our trading positions and portfolios on the exchanges. If it's a spot, it goes straight into the Ledger hardware wallet and gets that locked up so that we don't have any of those issues later down the line. Now, yeah, I'd say that you should probably go ahead and check out these exchanges, get yourself registered, and do yourself a favor in the future, because you do not know which ones are going to be around long term, and therefore you're going to want to make sure that you have access to everything in a bull market and you're not going to struggle. You don't want to be doing KYC and all these kind of things whilst you're in a bull market. Ultimately, you want to get that stuff done whilst you're in a bear market. Get yourself set up for success in the future. Let's go ahead and move on over into the trade areas. We have seen some recent trading activity from our members, which is fantastic. We can see that we've got an ADA short over here at 24.12%, doing really well. We obviously have Reggie Classics smashing through the trades as well. Fantastic stuff. Let's go ahead and take a look at the charts, because we did obviously have that short on Bitcoin, right? And so if we take a look at this, I entered this short position. I have actually exited this one now because I suspect we are going to be moving up before we move back down, and I'm going to re-enter into the short. So I've closed out of this short position, locking in some profit. A good trade. I still suspect we are going to be going down deeper here, but I'm going to be looking for a better entry, because today is going to be a volatile day. I do suspect that it's going to be great for short positions, but I want to get a better entry. Now, I could have stayed in here, but I would have lost some theoretical gains, and it's better to come out and go back in at a later date, in my opinion. Just how I operate. So I'll be looking for another entry a little bit higher in the price chart. I suspect it will probably come right back up to where we were in the previous entry, so about $26,500, something like that. Maybe even tapping on that 200 EMA, which is sat at 26,645. That could be a great entry for another really good short position to get more profit out of these moves when it comes to Bitcoin. All right, guys, I'm going to leave this video right there. If you have found it useful and informative, smash that like button. I do appreciate that. If you are new to the YouTube channel, then why not go ahead and subscribe? Tap in the bell, selecting all the notifications, and you will be kept up to date with everything that we do here at Cheeky Crypto. If you're on X, make sure you're giving us a follow and give us a repost. Really does help push out the content to more like-minded individuals. And I'll catch you all in the next one.